Good morning, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're here with you this morning for our weekly wrap-up. Graham, it looks like we had a really strong week last week. What can you tell us about that?
Yeah, we did, and I think some of the market is hitting some key levels. I mean, roughly 2/3 of the S&P stocks are now above their 200-day moving average. You know, that's the highest share since last January. So, yeah, we've had a pretty good advance. We really saw across the board U.S. equities advance, like you mentioned, potentially breaking out this year from these downturns that we're in, maybe with the feeling that the Fed could orchestrate maybe a soft landing. So if we break down kind of what happened on the indices and kind of certain sectors, let's look at the NASDAQ was up about 4%. So that was the side of the market that was down the most, right? From an indice standpoint, we saw the S&P and Russell up about 2.5%. And that broke down to about 9 of the 11 S&P sectors that rose. The leaders in that sector, we saw communications, technology, consumer discretionary. Again, that group that underperformed so much last year, maybe a reversion to the mean, really rallied the most so far this year because we saw that defensive sector really lag. Even crude oil slipped a bit, about 3%. Gold prices stayed elevated a bit. Gross domestic product came in slightly above. Came in about 2.9% for the fourth quarter. If we looked at consumer spending, it makes up about 68% of the gross domestic product in the United States, but that is moderating. That's coming down a little bit. And I think that's something that the Fed wants to look at to see, okay, has the effects of our rate tightening policy, has that caused enough damage to see if the consumers will start pulling back, companies will continue to lay off, so on and so forth. If we look at profits, we're down about 3% year over year, with about 20% of the S&P companies reporting right now. So we're just started. We're about to jump in. The next 2 weeks are really a big period for company earnings. So we're still seeing about 20% report. We're seeing earnings down about 3%. If we think about internationally, we're starting to see some of the international banking community really pull back on their stance on how quick, how fast, or even if they're going to raise rates. And we saw the Bank of Canada really be the first major bank to say that they're likely done with rate hikes, at least for now. We're getting some hints from others like Japan, so on and so forth. We'll just have to see how that unfolds.
Okay, well, are there some big announcements coming this week? Are any of the meetings and some news coming down the way that would affect how the markets play out?
Yeah, we really do. We have a handful of economic reports that's coming out and a Fed decision. Fed decision on interest rates. Now, it's widely expected that the Fed's going to raise rates, but how much? Are they going to do 50 basis points? Maybe they'll pull back to 25 since we're seeing some lightening consumer numbers, maybe the earnings coming down a little bit. Maybe it's not enough. So I think it's not a fact that maybe the Fed's going to act. I think it's expected. I think it's a shoe-in, but how much? Is it 50? Is it 25? With those other economic reports, I think we have a really interesting week kind of lining up for us.
Okay, well, we'll be waiting to see what happens there. Thanks so much, Graham. Thanks to you, our viewers, for joining us today. We're always so happy to see you on Monday mornings. And we hope you have a great week. And please stay tuned for next week's weekly wrap-up. We'll look forward to sharing you some news with you then. Thanks so much and have a great week.
Take care.